Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everyone. Welcome to your Friday Wealth Coffee Chats. Well, it's been a big week in our world. My name is Sarah Shome from Positive Money. We make up the lending section or the finance section of your 6-star team. So, been a big week, and the kids finally went back to school. And just as parents started to take a nice big deep breath in and have 2-second break, the RBA met this week and raised interest rates. So, what I wanted to do today was just demystify that a little bit, and let's break it down for what it actually means for you. So for the last 2 years, we've had it pretty good. Okay, so we've not had any rate cuts, rate increases for the last 2 years, and now as of Tuesday, they went up 0.25%. When we break that down for what it actually means for us, I did some calculations because I wanted to sort of put it into a dollar figure. I feel like that relates to us a little bit better. So if I base it on a $500,000 mortgage balance, a 0.25 increase is actually $3.42 a day. Okay, so if I break that down to a 31-day month, then the extra interest that you'd be paying each month on a $500,000 balance is $106.16 per month. So although it's an extra amount that we have to pay, it's not diabolical, particularly when we start to put it down to that sort of dollar figure. Where the concern comes in is, where do we think rates are going to go moving forward? And, if you've had mortgages for a while, if some of us are seasoned and we've been through the peaks and the troughs and we've had the pros and the cons, we've had great interest rate cuts coming into the early 2020s. Then we had the PTSD moment of 13 interest rate hikes over in 2022 consecutively. If you're new in the finance game, then you may not have had this sort of experience before. And so it can be a bit concerning for households, particularly as the cost of living continues to rise. So I wanted to sort of break today into 2 parts. Firstly, where do I feel that interest rates are going to go for this year? And also, what can you do to mitigate these increases? In terms of interest rate cuts, the reason why the RBA has increased this week is because of inflation, and the inflation figures are above the 3% mark that they want as a target. I think talking about inflation and things like that is a topic within itself, and we might cover that one next week or in the next couple of weeks. In terms of where I feel that we're going to move into over the next 12 months, in terms of rates, I don't think we're going to have the same sort of moments taking us back to 2022, where we're met with consistent hikes over and over and over again. And I guess that's where it started to really hit our pockets. One or two you can deal with, but when it's consistent and it's every single month, that's where it really started to impact us. The RBA now meets every 2 months. So they will meet again in March, because they didn't meet in January. So they will meet again in March, but then after that, it'll be every 2 months. So I guess where we were in 22, where we had the consistent every single month, it went up by another, on average, $106 per month. Go through one quarter and all of a sudden you're up at, over $400 per month for the extra in terms of interest. I personally feel that we may be in for a quiet year. Okay, so I don't think that we're going to be met with a vast amount of cuts. The banks aren't expecting a big year in terms of rate rises, and we can see that when we're looking at their fixed rates. Interestingly, the banks were actually quite slow to respond this time. So normally what we saw when we saw interest rate rises, the banks would almost have the email ready to go. It was almost in the outbox and hitting our inboxes as soon as it was announced. What we're seeing now, though, is that it's actually been it's been over 48 hours, and we're only starting to see some of the emails come through now. ANZ did announce first, but we're only starting to see some of those emails come through from the lenders now. So that to me tells me that they're probably looking at internal sales, internal structure and risk assessment in terms of what they're offering, and then how can they drive that for business moving forward. I think if we can keep if we can keep inflation in check, then we will probably be in for a quiet year. I don't see there being any further rate rises. If there is a risk of rate rise, I think we will see it in Q2 of this year. So coming into the May, sorry, I had to count that one out for a second. So we may see one there, but it's really going to come down to those inflation figures, and did the rate rise that we're copying now impact that rate and that percentage? If it does, then we will not see another rate rise. If it doesn't, then that's when we may find one. But then moving into Q3 and 4, I don't predict that we're going to receive any further increases. And it's definitely one that the banks are also taking the opinion of too. So that's all well and good in the finance world. Good morning, Caroline. Hope you're well. But what does it actually mean for you? So I think that when I break it down to a dollar figure, so we're looking, as I said, $500,000 balance, a 0.25 increase makes $106 different a month. So what does that mean, and how can I mitigate that? I think moving into structure is a really important part. This is where you need to really bring in your experts and your trusted team that we talk about so often. You need to be having a chat to what is right for you, okay? Utilizing your offsets, utilizing the right structure. Good morning, Chris. Hope you're well. These things are going to mitigate that $106 a month, okay? Do we need to start cutting back? Do we need to start foregoing things that we finally made peace with and could finally, put into the budget when it came to the cost of living crunch? I don't think we're there yet. If you're really concerned and there is no room in your budget for further increases, or you need that stability, then I think you should be having the discussions with your trusted team around fixed rates. And so is fixed rates right for you, or is a variable rate sort of structure better for you moving forward? Offsets, again, that can make a difference of 0.25. So these sorts of things, and not only that, I'm going to park that for a second. You can just call your bank. Okay, so there's always that, right? The RBA says it's going to go up 0.25%. Great, but I'm going to call my bank and get 0.3. So you're actually better off. So the bank's retentions teams are there to they're designed to keep you there. Okay, so use those teams to get the best deal for you. And as a broker, that's definitely what we do for our clients as well. So these little changes can make a big difference for you. It can offset the most recent rate cut, but I think this is a time where you just need to just check in with your own finances and say, this is where I'm at. So can I, or do I have concerns about future rate rises? Can I afford to absorb those future rate rises coming into the next 12, 18, 24 months, whatever it might be? If the answer is no, then we need to be discussing fixed rates. If the answer is yes, then we need to be discussing variable rates and how to mitigate that. As I said, coming with the redraws, the offsets, and structure and repayments and blenders and all these sorts of things. So there's definitely ways around it. I don't think it's quite Armageddon just yet. Look, as a mortgage holder, I can tell you PTSD, okay? So when I heard rate rise, I was like, here we go again, and I'm in the industry. So, but when I sat down and really broke it down to a dollar figure, when I sat down and looked at where we're sitting in terms of economy and where the governments are going and so on, and what it is that they're trying to achieve, I don't feel that we're moving into an interest rate rising year. Maybe one more, but I still feel that we're probably sitting on a quiet year. So that's it from me, guys. I hope you have a wonderful weekend, and yeah, hope you enjoy the sunshine. If you're in Victoria, it's probably going to be too hot as usual. If you're in Queensland, it's always hot there. Stay cool, and I will see you all soon.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.